Some of you may be asking, well, how can we identify whether a specific move in the price is a bull trap or potentially a bull trap or indeed a false breakout? All right, guys, so as you may know, in Elliott wave theory, it is said that corrections, a corrective move, is composed of three waves called ABC. So as you can see from this chart, a typical correction is often composed of three waves called ABC. A wave down, B wave up, and then a C wave drop down, okay? By the way, ABC structures usually have a 3-3-5 structure. So in other words, three waves down, three waves up, and then five waves down to complete the ABC pattern. But again, I don't wish to confuse you. All you need to remember for now is that the B wave within the ABC, the B wave is often composed of three waves, and these are also called ABC. Okay, now here's why this is important and how this can help you. Some of you asked me, is it possible for the B wave to go above the high of the A wave? In other words, is it possible in an ABC structure, is it possible for a B wave to exceed the highs of the A wave? As you can see here, is that even possible in Elliott wave theory? The answer is yes. In fact, as you can see from this chart, it is perfectly possible for a B wave to go above the high of the A wave. And you can see in this example, the B wave, so you had an ABC scenario, ABC correction, but notice after the A wave down, you had a B wave rally. The B wave took out the prior high, the prior A wave start, to start the A wave, and then dropped in a massive C wave, as you can see there. So guys, remember, one of the key characteristics of a B wave is essentially a bull trap or essentially a false breakout. So as you can see from this chart, just breaking it down very simply, you got A wave down, three waves up in the B wave, and then a C wave, a five wave drop to essentially make this ABC, again, in a scenario where the B wave goes above the high of the A wave. Okay, now, there are examples of this on Bitcoin too. Bitcoin has done this multiple times. On this chart, you can see right there. Notice A wave down, you had the three waves down, then you had the B wave rally. The B wave rally, by the way, look what it did. It took out the highs. It took out the highs, just a few points took out the highs, and then it dropped. That's a classic false breakout because it took out the prior highs, just a few points there, and then quickly reversed and went down again. And guys, when you see that kind of false breakout with bearish divergence, there was a bearish divergence on the chart, especially when you have over bullish sentiment. You can over bullish sentiment, bearish divergences, taking out the prior high with false breakout, classic B wave scenario. But how can you tell with a high probability, for example, that it's a B wave? What you need to do is count the number of waves within that structure, within the rally. So when you see the rally, how many waves are within it? Is it 3 or is it 5? If it's 5, probably it's not a B wave. But if it's 3, then remember guys, B waves are usually composed of 3 waves ABC. As you can see from this chart, if you can count 5 waves, then it's probably not a B wave. It's probably an impulsive wave, not a corrective wave, not a B wave, but it's probably an impulsive wave, like wave 1 or wave 3 of something else, okay? However, guys, if you can count 3 waves, then it's more likely to be a B wave, false breakout, or bull trap.